So thank you guys for joining our live stream. This is about a machine learning based stock price forecaster that we're using natural language processing. And I like to try to keep this interactive. So please, as you guys have questions, comments, thoughts, just drop it into the circle chat here. So I'll put a message here just so you guys know where the chat is. Let me see here. Okay. So here's the agenda for today. We're going to start off with who's on the call, and then I'll give introductions to myself. Then we're going to talk about machine learning based forecasting, why we were doing it. Then we'll talk about different tools that we'll be using. We'll go over some of the Colab code, also how we move the model into production with crypto and also some indexes. Then we'll go over the course, and then questions. Hopefully, we could do this throughout the session. But we'll also have questions at the end. Okay, so let's move forward here. Okay, so just to make this kind of interesting, if you can, in your circle chat, just type out the following. What is your occupation? How much you know? How do you know how to program code? And then how much investment experience do you have? So I'll do that first, just to give you guys an example. So occupation, machine learning expert. Yes to programming. Programming 106. Then how much investment experience do I have? So I've been option trading since college. So okay. So if you guys can do the same, that would be great. That way I could kind of tailor this for the audience. Okay, so let me begin with who I am. So my name is Gray Tanaka. I've been an instructor with LumaWealth for some time now. And this is something I do on a part-time basis. I'm actually a machine learning expert. I've been doing a lot of algorithmic trading for some time. I run a company called Pika Group. And what our company does is we take trading strategies and we use machine learning to make them better. And prior to that, I founded a company called Percolata, raised over $10 million. We raised money from top-tier investors like Google Ventures, Andreessen Horowitz, Miller Ventures, a bunch of others, where I was founder and CEO. And so that's just a little quick background. Also, I went to Caltech and also UC Berkeley, where I studied computer science and electrical engineering. I also did a little bit of grad school at Stanford, where I studied electrical engineering. And as mentioned earlier, I've been programming since I was 6. So for those of you that are just joining, if you can in the chat, just kind of give a little background on yourself. That would be great. I'll just copy this so that for those that attend a little bit late, you know what to do in the chat. Okay. Thank you, Yolanda, Andrew, for your background. And if the others that are on could also do that, that would be great. Let's see. And I have this chat window in the side here, so I'll try to glance at it just so that I can keep track of the questions and comments. So what is LumaWealth? LumaWealth is kind of like it's a group where we're trying to help people become, it's kind of like the idea of getting a fish versus learning how to fish. We're trying to teach people how to fish, right? Basically how to use algorithmic trading, how to use technology to do better trading. So one of the best ways to actually get to know about LumaWealth is our YouTube page. So I'll show this to you guys. So on our YouTube page, we have a lot of videos, things on algorithmic trading, blockchain programming, using machine learning. There's a bunch of reviews on the courses that we have. There's a lot of courses on here that are free, so I encourage you guys to check this out. A lot of great content. So this is one great way of knowing what Lumen Wealth is. And then the second thing is to look at our Discord. Actually, let me just paste the Lumen Wealth link into the chat here. The other thing to do is check out our Discord. So this is our Discord. Our Discord is very, very active. So it has a bunch of people who've taken the courses, even people who haven't taken the course. And people are talking about different trading strategies. They're talking about algo trading, machine learning, talking about crypto. So lots of discussions. It's actually pretty hard to keep up because there's a lot of people on here. And like you can see right now, there's 159 people active and online right now. So you'll find someone to chat with, and a lot of people help each other. It's a really great community. So I encourage you guys to check out our Discord. And let me put this link into the chat as well. Okay. So again, I'd like you guys to try to ask questions during the presentation. Of course, we'll have a dedicated question section at the end, but that way it keeps it interactive, and that way I'm not sure that people are following along. So if you think about what is the core of trading, it's really forecasting, right? What you're doing when you're trading, whether it's crypto, whether it's stock options, or it's stock or Forex, what you're doing is you're trying to predict what's going to happen. And there's many ways to do that. So a lot of people use traditional indicators like RSI, or Relative Strength Index. And these indicators help you figure out what might be happening in the future. So an example here with the STARS group, as with the STARS group, you can see that there's an RSI calculated here on the bottom. And when the RSI breaks 66, it might mean that the stock's going to go on a run, right? Kind of a bit of a bull run here. And you can see that it kind of does that until it hits the lower threshold of 33. So this is an example of using RSI as a way to help predict kind of like the beginning of a run. So maybe you could have acquired TSG here, and then maybe as a bull run ends here, you can maybe think about unloading. But the problem with these kind of traditional indicators is that they're pretty noisy, right? So as you can see, it hits 66 many times here, right? So it's kind of hard to know, was it here or was it here? Because like over here, it was also 66, right? Or over here it was, well, but it was kind of level. So it's not the most reliable indicator. And so I'll talk about one of the reasons why it doesn't work as well. So there's this really great website called Seeking Alpha. Let me show you guys this website. You guys probably might know about it already. But it has a lot of great investment advice on there. They talk about different companies. They talk about like where things are headed. So lots of great news stuff on here. I'll post this link onto the chat as well. Okay. But one interesting article on Seeking Alpha is they talked about how 80% of the market, of the volume of the market, is actually algo trading. So only 20% of it is actually people manually trading on Robinhood or pointing and clicking and trading. Most of the trading is actually done programmatically. And what this means is that a lot of the really easy prop trading strategies that may have worked 30, 40, 50 years ago have largely been eliminated. And so in fact, I would argue that if you're trading manually now in the market, it's really, really tough to make money. And the reason why is because a lot of the trading indicators like the RSI are automatically programmed in, and they will automatically trade much faster than any human can. And so a lot of the really easy trading strategies are now gone. The second problem with traditional indicators, besides the fact that people usually use it now to do automatic trading is that they're very simplistic. They don't have the capacity to capture really complex forecasting patterns. So the way you can judge how powerful a model is how many parameters it has. So if you think about like a simple model, like let's say just a straight line, right? So y equals mx plus b. It only has two parameters, right? It has the slope plus the intercept. It's a very simple model, right? And there's more complicated models, but a lot of them don't have that many parameters. So more parameters the model has, more complex it has, more powerful it is. But these simplistic traditional trading indicators, they only have a handful of parameters. So they're not able to do that good of a job in terms of forecasting, as we saw with the stars group on the prior slide. So with traditional indicators, the benefit is that they're very easy to calculate and understand, right? They're very straightforward. Usually you could calculate them with just a simple calculator. You don't even need Excel to do these kind of calculations. But as I mentioned, they have very limited ability to factor in different types of information. So like if you want to factor in, what did the Fed do with the rate? So what's inflation doing? Or how's unemployment? Or how's the revenue impact at a company? It can't really factor that in. A lot of them, in fact, only factor in historical trading information, historical pricing. Oops, we're flipping all over here. And the third problem is that they're just way too popular. And so it's hard to have an edge because everyone's kind of using it already. In fact, a lot of these trading indicators are already built into a lot of trading programs or websites already, where on Schwab you can actually see a lot of these trading indicators. Now with machine learning, the downside here, and the reason why it's not quite as popular yet, is that it's computationally very complex and much harder to implement. So that's kind of like why it's not being done as frequently today. But the big advantage that machine learning has is the ability to factor in lots of different information. So you could factor in, someone's Twitter feed. You could factor in what's happening on a subreddit. You could factor in, what's happening with the war in Ukraine, right? So, and that's important because when you're trying to build a forecast model, what you're essentially doing is you're trying to mine the forecast signal, right? That's what the model is trying to do. And more different sources of signal you have, the more you can mine, because there's only so much signal in historical pricing. And then the other big advantage of machine learning is that, as I mentioned, it's relatively rare. Not that many people are doing, so you're able to get an edge by doing this. Now, what is machine learning? So the best way to understand machine learning is to contrast that with traditional programming. With traditional programming, what you're doing is you're putting in data. So maybe, for instance, you're putting in, let's say you want to forecast the price of the S&P 500 for tomorrow. So you're putting in tomorrow's date. So today is 1.5, so you're putting in 1.6. That's the data coming in. And the program might be, let's just say it's a simple moving average, right? So it's just a simple moving average program that looks at the historical data of the pricing of the S&P 500, and then it spits out what the moving average says is for 1.6 tomorrow, right? So pretty straightforward, right? So the data is, basically we're trying to forecast tomorrow, and we're putting in the historical data for the moving average, and the program is just calculating the moving average. So very straightforward, right? And this can be done in lots of different languages, but probably right now the most popular language is Python. The difference between conventional programming and machine learning is what we're essentially doing is we're flipping the program and the result. So with machine learning, what you're doing is you're feeding in similar data, but rather than feeding in the program like Python, what you're feeding in is the result. So like what is the result for tomorrow? Okay, of course we have to train it. So we're not putting in tomorrow, we're putting in prior forecast. And what the machine learning is doing is it's learning how to forecast for tomorrow, essentially. And so what it spits out is a model, or essentially a program, right? And a lot of times people use neural network programs. And this program will forecast the results. So it looks at what we call training data, and then it will spit out the result, right? It will spit out the model that will predict the result. So machine learning is actually more similar to the way you learn. So if you think about how did you learn how to add, or how did you learn how to do algebra, or how did you learn how to do anything, typically someone taught you or you read a book where they had a bunch of examples of here's how it works, right? So this is 2 plus 2 is equal to 4, 2 plus 4 is equal to 6, right, etc. And then you learn how to add. So this is very, very similar to how we do it as humans. Now, some humans, of course, we get brain surgery, right? Hopefully not, but some people have to have brain surgery, right? And that's more analogous to conventional programming, right? We're explicitly like wiring the neurons to do a certain thing. And so in some ways, machine learning is a little bit easier than conventional programming because really what you're doing when you're doing machine learning is you're a teacher. You're like very much like how I'm teaching this class. You're teaching the model how to learn, right? You're testing it and seeing if it's good or not. And that's also why, for instance, I like to get interactive questions because I could be talking to myself, but I could be losing everyone here on the call. So feel free to ask questions as we go along. Right now, most of what's happening on computers is through conventional programming, but more and more is happening through machine learning. And one of the big reasons why is because there's some problems like forecasting or doing chats with people or generating an image where it's hard to do that through conventional programming, but it's relatively easy to do that through machine learning by having training data. Okay, so let me go over some of the tools that we're using. One of the tools we're using is something called Alpaca. Alpaca is a nice site. Let me put the link into the chat box here. And what Alpaca is it's a place where you can do a lot of algorithmic trading. So it has a lot of real-time data. So this is the data API. It actually used to be a lot more generous, but now they have a lot more restrictions on it. But like 6 months ago, or a year ago, you could do a lot more than you can today. But still, it's a relatively good price. And their APIs in terms of trading is also pretty good. So, and they're all RESTful APIs. So it's pretty straightforward in terms of how to use these APIs. So we're going to be using Alpaca, and there's no affiliation to us. They just happen to be one of the better APIs out there. We're using Python 3, so Python is probably the easiest programming language to learn right now. Pandas is kind of like a Python library that is like the Excel of Python. So you could do a lot of manipulation of tables with Pandas. We're going to be using a Python library called TA. It's a technical analysis Python library. So it has all the like RSI, moving average, EMA, all that kind of stuff in there. We'll be using a basic machine learning library called scikit-learn. And then I'll be showing you all this running on Google Colab. And then we deploy a lot of stuff to Google Cloud because it has a lot of horsepower on there, but also because when you're trading live and you're in production, you could trade from your laptop, but it's not really advised because what if you lose connection? What if your battery dies? What if you lose power? It's not a good situation. So running in the cloud is good because you get lower latency, better reliability, and that's very, very important when you're doing algorithmic trading. And then we'll be using the Google Natural Language Processing API to do some sentiment analysis. So to set up this, we'll be using Alpaca, and then we'll be scraping news data from FinViz. So I'm not sure if you guys have seen FinViz, but it's really neat because they have a lot of, let me kind of close this. They have a lot of news data on different stocks. They also have this really great summary here that kind of shows you, how the market did, right? As you can see, a lot of the market's red today, so it's not great. But you can see the different sizes by sector, and different size market caps, etc. So it's kind of a neat website. So let me paste the link onto the chat as well. So we're gonna scrape the FinViz website. We're gonna use a library called Beautiful Soup to do that. And what we're going to do is we're going to generate training data. And then we're also going to generate a set of test data. We're going to train the models and then generate some predictions and analyze the results. So let me show you the example here. So for those of you that don't know Google Colab, it's a great deal. It's free, so no charge. And if you don't know how to use Python, it's a great way to learn Python. So I have this little example here where, you can, Python is super basic, right? So you could uh, you could it's I don't want to go over Python syntax, but basically each of these cells here are like a little Python program that you could run. So you just hit the little run program and then it calculates. So it's a really great way to interactively use Python. In fact, they call these interactive Python notebooks. And so that's what it does. That's what the cell is. And again, Colab's completely free, and also you have access to GPUs. So it's a pretty neat setup. The only problem is that you can't run large jobs on it, and if you don't move your mouse after 15 minutes, it times out and then logs you out, and you have to do everything again. So here's some of the libraries that we're using for this example here. I mentioned a lot of them during on the slide, and then we'll use Google Cloud. So this is Secret Manager, and this will get the credentials for Alpaca. So we use Alpaca to get the authenticate Alpaca to get the data, and then also for the trading stuff. And then down here, what we're doing is we're basically authenticating with Google Cloud, and especially the API, the Google Cloud NLP, Natural Language Processing API. And what this is doing is you put in the string, and then it gives you a scoring of the sentiment, like if it's positive sentiment or negative sentiment. And then what we're doing down here is we're going to scrape using Beautiful Soup the website for the news articles. And then when we get the news articles, we're gonna go through them, and then what you see down here is the different news article headlines, and then what we're doing here is we're putting that through the sentiment analyzer, and so you can see that it generates a score, right? So like this one here is kind of like a neutral score, so it's kind of 0. Some of them are kind of a positive score, or some of them are kind of negative. So we score each of the headlines. And yeah, so then what we do is we put this back together with our other data. And down here, what the functions are doing here is basically getting the quote data. This looks a little bit complex, and it's complex mainly because Alpaca has a restriction on getting only 200 rows of data at a time. So you have to have this loop that kind of loops to get all the data that you need. Okay, so with all that set up, we could look at it with the NLP. So in this case, I'm just using Agilent as a target, and what we're doing is we're using the technical analysis library to generate a lot of the features. So some of the features here are just based off of time, so like time of day, what is it in Unix time? So we take the current time and we make a few features out of it. And what I mean by features are these are the inputs to the model, right? So this is kind of like what I showed you earlier on this diagram here. So the features are kind of like the data coming into the model, and I'll go over what the results are right later. But basically, what we're doing here is we're generating the features, or what I called here the data. And then I also use the TA library to so I get all the historical data, and then I generate a bunch of features using the TA library. And then for test data, so when you're doing machine learning, you have to have the concept of training data, and then you also have test data, and those want to be separate because it's kind of like giving a student a final exam, but giving them the answers. You don't want them to see the answers. You want to make sure they actually learn. So you want to have the test data totally separate. Oh, by the way, I forgot to mention the actual kind of like ground truth, right? So there's the features, and the ground truth is essentially the price of the stock, or in this case, Agilent. Okay, so for test data, it's pretty much the same setup. It's just different time period. So we do it after the training period, so that the future doesn't leak into the past. Okay, and then what we're doing here is we're essentially using a sliding window to train our model. So in this case, we're using a very simple model called random forest, and this fit function allows us to try to fit the model to the training data. So it's trying to learn what the patterns are, so it could do a better job forecasting. Oh, I forgot to mention, we're only forecasting like 15 minutes in the future, so not a very long-term forecast. And one reason why in machine learning we tend to do machine learning is really good with lots of data. Humans are usually much better when there's relatively sparse amounts of data. And the reason why we in machine learning, for algorithmic trading, we tend to do very short-term trading, or trading that happens on a fairly frequent basis, is because you want more training data for the model. So that's why we have relatively short forecast windows, like only 15 minutes in the future. So we're basically like this window is like moving through on a 15-minute basis through the training data, forecasting every 15 minutes, right? As the window slides through. So that's what this code here is doing. Okay, and then after we train the model, we do the prediction using. So we put the test data features in, and then it predicts what the price was, right? And so so here's kind of how it looks like, right? So this is the ground truth, is what the close price is. And then here you can see all the different features that we created, right? Most of them are from the TA library. And then you could see this is the close price, and then you can see what the predicted price was, right? Okay, so now let's look at how we did. So we just plotted out the results here. And unlike crypto, the traditional trading market is closed a lot. So these straight lines are when it's closed, right? It's just basically like this is a weekend and this is overnight. What you want to care about in terms of accuracy is how closely does this orange line follow the blue line when it kind of jiggles a lot, right? That's period of active trading, right? So overall, you can see it's a pretty good job in terms of what we did. And then if we look at what are the most significant features, you'll see that RSI is actually a pretty strong feature, and that's why a lot of people use RSIs, because it's not bad in terms of predicting what's going to happen. And then if you look at it in terms of error, right, we have a mean squared error, which is a way of measuring error rate, and in percentage error. Percentage error is 0.25 or 0.26%, so not bad. So let's look at how's the same model but without NLP indicators. So if you do that without NLP indicators, we're basically, what we're doing here is we're just dropping out the sentiment from the training set, right? The training and test set, right? So we're just dropping it out and doing the same exact training that we did before, and then yeah. So if you look at the results, let me scroll down. Okay, so you see kind of similar results, but what we want to know is how much of effect did NLP have? So we could do something called or calculate something called the p-value. In statistics, basically, if it's really, really small, then it's significant, and if it's large, then it's not very significant. And in this case, you could see that it's pretty small, right? This p-value is really small, so it has significant improvement to the model. So this is kind of like so there's two stages of machine learning. The first stage is you're doing all these experiments trying to figure out how do you get a good model. But once you have a good model, then the next step is you move to production. So I know I went over a lot of technical stuff, so I don't know if anyone here has any questions, but if so, let me know. And I might have gone a bit fast, so feel free to ask questions. Okay, so so once you have a prediction, once you have something that predicts what the stock price is going to be, how do you take advantage of it? Well, there's many different triggers you could do. This is probably the simplest trigger you could have. And what this does is if the predicted amount is bigger than the current price, right, times some sort of threshold, right? You don't want it to be exactly that because otherwise it would jitter a lot. Then what you want to do is you want to accumulate more stock, right? Because the predicted price is going to be higher. And the threshold maybe it's oh shoot, maybe this threshold is 5% or 10% or something. There's some sort of threshold that has to clear. The predicted price has to clear in order for you to trade because there's trading costs involved, right? Like commissions. But if the predicted price is smaller than the close price times some sort of threshold, then you want to sell the stock. But if it's within that threshold, then you want to keep it the same. So so once we have a good model that does this prediction, then we want to do trading. You actually want to trade on the prediction. Okay, so once you have a great model, what you can do is you can go to our GitHub here. So on our GitHub, we have this free model here, or not model, but free backtesting environment. It's 100% free. You can go to our GitHub. Let me paste this into the chat. And it's really easy to use. There's a good documentation here that you could read on Lumabot. So it talks about kind of like all the how to use it, what are some of the advantages. So there's a lot of great content here. So you can use it to do backtesting. You can use it for trading crypto or backtesting stocks, options, futures, forex, right? So it kind of handles all of that, and it has a lot of good support to a lot of the top brokers, right? Like Binance or Coinbase, like if you're in crypto, or Alpaca Interactive Brokers or TradeStation if you're just doing traditional equities. So, and to actually use this is just a simple pip install. So pretty easy to use. So highly suggest you guys take a look at this. Okay, so now what I'm going to do is, now that we have a model that seems to be forecasting pretty well, what we're going to do now is we're going to use it to do some trading, right? So we're going to use, oh shoot, this thing's jumping all over the place. Okay, we're going to use it to do some trading. And in this case, we're going to predict the price of Bitcoin. And then if the forecasted price is higher, buy it. If the forecasted price is lower, sell it, right? And then same thing with TQQQ, which is basically a amped up version of the stock index. So I'll show you what the workbook looks like, and then what the final project looks like. So let me move over my VS Code here. Oops. You guys can't see my... Okay, here, hold on, I have to exit this. Okay, so anyways, I'm not going to go over the code in great depth because there's a lot here, but basically what you do is you use the Lumabot code, and then you basically put in your forecast model, okay? And then you also put in your trading strategy, right? So like a simple trigger, like I showed you before, plus maybe for instance like random forest. So you put that in here, and then you put the security that you want to trade, and then you could then you run it. And when you do that, so I'll show you with crypto first. So when you do that, what it will do is it will generate. Let me kind of close this. It will generate all these log files, right? And in the log files, you can see kind of like what it's doing, right? So it runs, right? and it tells you like, is it buying, is it selling, what the forecasted price is, has a really detailed logs. And then yeah, so you could see kind of like how accurate it was, like what the error was, et cetera, et cetera. So you could see like all the data. And then the other thing it will do is it will render it. Okay, it'll create this HTML file here, and it will render the results. So okay, so this is kind of like an early example, right? And then let me show you like some of the later runs. So let's see here. Oh, it's not rendering here. Here, let me try this one again. Disabled. Let me try this rendering again. Okay. Okay, good. Yeah. So here's an example of so you can see we ran a few experiments and then we were able to get the strategy a lot better. So what you'll see here is this is the strategy basically is our machine learning model with a simple trigger. So it's forecasting and then it's basically comparing against the benchmark. Okay, so QQQ is basically SPY, except I think there's like a 3x leverage on it. Um, so so you could see that over time it does a lot better than the benchmark, right? So it has a much higher performance. One way to measure performance, of course, is just looking at the cumulative average growth rate, or CAGR. So much higher percentage, which is great. But the other way of looking at it is the Sharpe ratio. So usually higher Sharpe ratios are better. So this is a 2.43%, or sorry, 2.43 Sharpe ratio versus 2.09. And then so you could see kind of like the different statistics of this strategy versus the benchmark. So so generally kind of better all around, and then it gives you kind of like all of the kind of important characteristics of the strategy. So let me try to load the crypto one as well. I'm gonna load a later one, maybe this one. It's having trouble rendering though. Let me see if I could close some of this off.
I wish I could, but I can't close apps here.
Siri's talking to me. Let's see, maybe this one. Okay, here, this one should work. Okay, yeah. So you can see like after we did some work on it, we were able to tune the model so that it's actually performing much better than the benchmark. So the benchmark here is essentially just Bitcoin, to buy and hold on Bitcoin, and then the strategy is basically forecasting the price of Bitcoin and trying to do better than just a buy and hold strategy. So you can see here in general, better Sharpe ratio, as well as a better compound annual growth rate. Again, it has all the nice stats here, so you could see the detail. And basically, what you do to do this is you put your strategies into these files, and then you import in the NumABot library, and they have a lot of examples in the. Let me show this again. So if you go here, there's a lot of examples in the example directory. So to know how to use this. So it's pretty straightforward. Okay, good. So let me move on. Okay, so just to kind of summarize, so the forecast, basically we just use law of common indicators as features. These were just indicators based off of the price, the historical price of in this case Agilent. We use a simple random forest model. We forecasted 15 minutes in the future. So every 15 minutes we forecast the future. Then what we did is we took this model and then we put it into production. And the way we put that into production was using Lumabot. So we basically used Lumabot GitHub. We dropped in the model, and then we did back testing to make sure it actually works. And then the nice thing with Lumabot is once you have the back test working, you could actually start doing paper trades and then real trades, because we integrate to a bunch of different brokerages. Again, our examples here is just to show capability, not necessarily guarantees of trading returns. But in the course, we're going to go into a lot more detail about like what are the basics, what is deep learning, how do we build a really good stock forecasting model. And so let me show you guys the course. So let me paste this into the chat here. Okay, oops, sorry, I need to move it over. Okay, so yeah, so this is a very popular course, and it's kind of optimized for people who want to apply machine learning to algorithmic trading. The nice thing about this course is that with machine learning, there's not as much programming as it was with traditional programming, because you're basically training models, so there's more data manipulation. And what you get out of this course is learning the fundamentals of machine learning and how to apply it. That's really important. And then you can use the models to make better investment and trading decisions, and then also understand how to apply this to time series. So time series is different than non-time series. A lot of machine learning out there is non-time series, but time series is really important to forecasting. You also see how to use natural language processing. So kind of like how we use NLP to look at the FinViz website and then estimate what the sentiment is of that statement. And then you'll be able to carry out more in-depth investment analysis, know how to scrape websites like FinViz and others like Reddit. And then, what's really important actually is to get a lot of the stuff running in the cloud because of just stability, speed, like in terms of latency, as well as this horsepower. So we'll do a lot of that. Also, Google is pretty nice because they have a lot of really powerful models. Plus, they give you a lot of credit initially. So you get like $300 credit just for signing up. And there's several different versions of the course. One of them is just video only. So you have access to a huge library of videos that go into depth about each of the concepts. There's also live learning. So live learning is kind of like what we're doing now, except we all see each other. And typically what I like to do, I like to go over homeworks first, and then we do a lecture, and then typically a lab. So I think the best way to learn is actually by doing. And then we also have the ability to do kind of like one-on-one. So if you have you need more specific help on a project that you're working on, we can also do that as well. So here's the course curriculum. So week 1 is we kind of introduce each other. We talk about the course layout and get everyone set up on the tools, and we do a bunch of Q&A. One of the things I want to emphasize about the live course is that the neat thing here is that a lot of the people, they find their trading partner through this course, and so we encourage people to work together, because sometimes people can make up for each other's weaknesses. A lot of people do homeworks together or have study groups together. So definitely want to emphasize the bonding aspect. Week 2, we get into what is machine learning. Why do we do machine learning? What is it? We start with a super simple model called linear regression. Then we move up to a slightly more complicated model called random forest. We go over the training process. That's machine learning is all about the training. So we'll go into a lot of depth around that. And then we'll get into more advanced models like deep learning models and what the difference is, when do we want to apply it and not apply it. And the training process is actually quite different. It's much more complicated, but also the validation is harder. And then week 4, what we're doing is we're optimizing models. So we'll be using some like AutoML type stuff, like Google ML tables. We'll be using Google Platform, learn how to use an experiment sheet. And then part 2, and by the way, each of these parts, what we're doing is the goal is for you guys to walk out of this course with a working trading bot for whatever thing you're trying to do, whether it's Forex or whether it's Bitcoin or it's some sort of stock equity like Tesla. So here we get into time series, and time series is actually quite different from non-time series. We talk about that, the theory, how do you do training validation, because it is different than non-time series. And then we start building a stock forecasting model. So like, how do you figure out what features to have? How do you measure the error, the whole project setup? And then the last part here is starting inputting natural language processing. And natural language cannot be underestimated in terms of how important it is, because a lot of the information in the world in terms of the impact on different securities is what people say and do. And so being able to take that non-numerical data into a model is really important. And that's what you use NLP for. And so you learn how to do that. And then the last week, we kind of hook it all up together, right? So how do you put it into LumaBot? How do you bring this to production? So basically, as I mentioned, the first part of it is to have a really good forecaster. And then second part of it is you put in the trigger and then productionize inside of LumaBot. So if you want to learn more about my background, I'm here. You could get more information here. You can also see a bunch of reviews, not just here, but you could go to our YouTube page. Oh, one thing I wanted to mention to you guys. Let me see. Oh yeah, here it is. The start dates. The start date, I think it's coming up towards the end of this month. But let me see if I could find it here. Yeah, I think it's towards the end of this month. Anyways, one thing that we're having right now is a New Year sale. So all the courses are 25% off, and you can use coupon code LA, New York, or NY23. So I'm going to copy this and paste it into the chat here. Okay, and this coupon code is good until the end of Friday, next Friday. Okay, so that's the webinar, and I want to give you guys a chance to ask me questions. So feel free to ask questions, comments, just drop it into the chat and I'll try to answer them. We have about 9 minutes here where we could take different questions or comments. Okay. Actually, here's the I found the dates. So yeah, so the course starts at the end of the month, um, and reservation closes on the 19th. So um, actually, I was showing you guys a bit of an older website. So this is actually the latest website. So let me paste this into the chat instead. Oh yeah, and then here's the pricing. So there's self-directed, which is the cheapest, and then this is the live course, and then this is one where you get one-on-one help. How long have I been doing machine learning in finance? I've been doing machine learning for uh, probably about the last 16 years. And finance, I've been option trading for myself personally since I graduated college. So at one point I was doing really, really, really well doing option trading. Um, and but now I mainly do kind of algorithmic trading. This is for myself personally, but we do, uh, we've done, I don't know, over 60 now, almost 70 actually, um, trading strategies for our customers. So we have lots of experience, everything from forex to crypto um, to equities, option trading, futures, just about everything. Yeah, I think thanks for your comment, Yolanda. I think AI is probably one of the biggest things going on right now. Um, it's truly revolutionary in terms of what AI can do. So I think it's definitely good that you learned it. I encourage all of you guys to learn it, whether you guys take our course or not. It's definitely the future. And so I think we're going to see more of it. If you guys haven't seen something called ChatGPT, you guys should check that out. Um, but there's just a lot of activity right now with um, AI today. Yeah, and finance and machine learning are really closely related. They finance has lots of data, a lot of numerical data, but the models that people use in finance are relatively simple, which is kind of surprising, because with just slightly more powerful models, you can do a lot more. You can really improve the accuracy. So we have about another 4 minutes here. Anyone else have comments or questions? Let me know. It could be about this or anything related to it. I'm happy to answer questions. Yeah, if you guys are just learning stuff, strongly encourage you to check out Colab. It's such a cool service that people offer, that Google offers. I mean, it's basically free. Plus, you could go here and you can oops, not this one. But you could change the run type to get like GPUs or even TPUs, which are accelerators for machine learning. Machine learning is very compute intensive, so having a lot of hardware is important. Um, so yeah, so it's kind of a super neat service that you guys should definitely check out. I'll put the link here. Okay. If there's no other questions or comments, we'll end in a couple minutes here. But want to thank you guys for attending and for your attention today. Um, I think learning as much as you guys can about AI and machine learning is going to be really important. There's so much activity in this space right now. Even though a lot of areas have collapsed, I think machine learning or an AI is just zooming right now. It's like one of the hottest things going on. So good time to learn about it, and it's good to apply this to finance. I think it's really important. I think this is like the trend that's happening. A lot of the major hedge funds and brokerages, they tend not to use as much machine learning. Because it tends to be black box. But I think as machine learning kind of percolates through the economy, it's going to be more and more common. In fact, I would argue that pretty much every application in the future is going to have some aspect to machine learning, just because it's so powerful. It makes the application a lot better. But thank you guys again for attending, and I encourage you guys to also join us on the Discord channel. There's so much discussion, especially if you have any interest in algorithmic trading. Okay, well, Happy New Year to everyone. Great chat with you guys, and hope to see some of you guys at the end of the month. And yeah, hopefully 2023 is a better year than 2022. 2022 was a pretty brutal year for just about every investment area. Okay, have a great evening, everyone. Bye-bye.